So today I'm going to talk to you about a concept that you probably just got to know about by the hard way, or you just never thought about this way. And this was me as well. It took me almost a decade to learn, honestly, a decade to learn this concept on what is the best time frames to actually trade and what's the worst time frames to trade. And I, as a trader, would be of the mindset that the more you have your feet into the water, there's more chances of you making money, or the more times you have your money into the stock market, there's more chances of making money. But it's not always the case, and I just want to point it out for you. First, through some demonstrations, or just kind of giving you the basics, fundamentals of it, and then showing it to you in an actual practical trading example. So I'll cover both of these, and like hang on with me, because this will be life changing in terms of your perspective on how you trade. So the best time frames to trade is the first hour and the last hour. So that's a very simple concept, and if you all this is all that you got out of the video, take it, and you're good. Now there's different concepts and different ways that the first hour and last hour applies. Now if you are a day trader, this concept is golden for you. So go with this. A lot of the traders will only trade the first 30 minutes. This is day traders. And maybe the last 30 minutes or so, but the first 30 minutes is where, or they would actually get into the market. Some traders, day traders, would prefer the 8:30 to the 10 a.m. mark. Okay, so I'm just giving you different time frames of comfort, and maybe this 8:30 to 9:30. So I'm presuming that 9:30 is the open. So if 9:30 a.m. is not the open for you in your country, just kind of like tailor it to your time zone. But 9:30 is trading opening time. I'm just giving you, this is the open time for us. So the concept is, if 9:30 is the trading opening time, the pre-market, and you may or may not have access to trading pre-market. It depends on your stockbroker or your stock platform, if they have that access to you. And now this is just on the day trading arena that I'm talking to you about. So don't get confused, but hang in there as I talk about day trading, because I'll soon get into long term as well. So 8:30 to 10 a.m. is the preferred time. 9:30 to 10, 9:30 to 10, or maybe the most, or 10:30 is the most that you should be active as a day trader. And in the evenings, or like the end of day, I would say 2:30 to 3:30 or 4 p.m, depending on what time. Now this is presuming that 4 p.m is actually close. Okay, if it closes for you in your time zone at 3:30, then it would be 2 to 3:30 or 2:30 to 3:30, but the last hour of trade is important. So this is for a day trader, and not all of you on this channel are day traders. Some of you may prefer trading long term, short term, and the sweet spot in trading that we found out is that you could trade at any point in time. But if you're a long-term trader, and I'm talking, what I define by a long-term trader is someone that looks at the daily charts or the weekly charts. Okay, so now if you're a long-term trader and you look primarily at the daily charts, the time frame that you should be looking at for deciding when to get in or when to get out should be usually the end of day, so the last hour. And this last hour is not fixed. I can't personally tell you you need to buy at dot 3 p.m. No, it doesn't work that way. But the last hour trade is an important time frame when you should decide to uh, get into the market or get out of the market. And let me give you a little bit of the thinking behind these traders. So if you have a candle, I'm just trying to see that I don't cover this up. So if you have a candle here, okay, now this is a green candle, and this green candle, this is considered to be the open. Yeah, this is considered to be the open. Now this is intraday, it's gone down, and this is considered to be the close. Now the open would be at 9:30 and the close would be at 4 p.m. So the concept is that you don't actually get to see a full candle on a daily chart, or it could, what would normally happen is that it would go up, it would go down, it would go up, and then it finally closed here. So you get to see an entire candle, and a lot of the day traders, no, let me correct it, not the day traders, the daily time frame traders, so I'm just going to show you the concept of a daily time frame trader. Likes to see the next candle close before they can actually step into the position. So this would be their buy, or this would be their sell. And they like to trade at the end of the day so that they can see a complete full candle. And this is again just a concept that is preferred by the more professional traders. And another reason why you don't see a lot of trades happening during the day is that, you know, you're a professional trader, you work in a downtown office, you'd probably want to go in for lunch, grab a snack, and like chat or have meetings during the day. So the start and the end of the day is when they would actually be focused on the market, and then they would just do their regular day-to-day jobs or whatever they have to do, because they don't just sit down on the screen and like look at it all day. That's not their job. Like they have other things that happen in the background that they would conduct during the day. So that's the time frame for the, and you could just do back tests and try and see if this makes sense for you. Now for the weekly time frame traders, and say you're an active trader on the weekly time frame, your preferred time frame would be on the Friday. This is the more favorable time that a lot of traders like to go, and Friday would be on the last hour itself. And similar as to the day time frame. So say this was now a weekly candle. So this is week 1, week 2. They would like to place it at the end of the week. So they have a full week before they can decide, okay, now I think the market's going to trend higher. And these guys don't trade for 1 week. They will actually keep it for weeks or maybe years. A longer time frame is what they are trending or looking to trade towards. So Friday, good day to decide on either to buy or sell. Last hour is also good on the daily time frame. If you are trading on the as a day trader, you would like to trade on the 2:30 to 4 p.m. time frame, or the 9:30 to 10, and or the 10:30, whatever is your preference. And that would give you enough of momentum to buy or sell, or get some traction on the market. Because a lot of the traders, if the market is flat, you don't make any money. It's only when the market goes up and down, that's when you can buy, and that's when you can sell. Or if it actually goes like this, you can buy and sell. So flat traders, nothing really. You can buy and sell and you'll make $0. So that's a concept. Now, one more important thing that I would like to talk to you about, and this is specifically for futures traders. So if you're not a future trader, you can just drop off, you got enough. But if you are a futures trader or a Forex trader, this is for you. So if you're a futures trader, and there could be other markets too, and Forex, but these are the two that come to my mind immediately. If you're one of these two traders, you would know that the markets are open for 23 hours in the day. They don't really close down. They're open for 23 hours in the day. So what that means is for you is you've got a lot more of a time frame to really trade. Now you could trade 23 hours in a day rather than just like a normal workday. Now, for a lot of the traders overseas, or if you've got a second job and you're trading part time, this is perfect for you because now you don't have to spend your time putting in like market orders or getting stopped out or getting it at a very odd price because you're just trying to cram in at the 9:30 mark. So that's why you would not want to trade in those time frames. But if you are a regular trader or a trader that likes to trade after hours, like you've got so many hours in the day. Now, having said that, the important thing is to for futures and forex traders is also stick to the regular hours trading time zones. So, and it all depends. Like if you're trading like the Indian rupee versus the dollar, um, so this is the US dollar. Like find a time frame where the US dollar is the most active against the Indian rupee. So this would be more also when the Indian rupee or the Indian stock market is active. Um, and it may or may not like be the same, but just find like and the way you'd find it is uh, look at the volume. So every chart has volume on it. So this is a chart, and you would see these bars, and these would be green and red and like green and red. And then you'll suddenly see like a huge bar here, and then you'll see another huge bar, and then you'll see another huge bar. Then you'll see these small bars. So what these small bars indicate is, and the market could not be the same, or the market would be more flat in those time frames when it's a low volume, or it could actually just go up as well. But the momentum may not be as significant. It may just go up a little and then come down. And that's the reason why people prefer to trade during core hours. This is the core hours. Not saying that this was like a typical day. It would actually go up and go down as well. But it gives you enough of momentum to place a buy and sell order. So avoid trading in the low volumes. This is a complete no. Avoid trading the low volumes is complete no. You can leverage this to place an order if you're trading long term, and that's where I would say this would really make sense. But if you're not trading long term, stay away from those time zones and trade during like the core hours. And same applies for futures traders too. Like if you're trading the ES, which is the futures market for the S&P, or the NQ, and this is just the US futures. There would be futures available or may not be available too in your time zone or in your country. You may not have the futures and forex that run for 23 hours a day. It may just run for during core hours, or you may not have access to trade it during 23 hours a day. Depends on your country of origin. So it varies, but the concept is that trade in where the highest volume is available, because that's where you would see a lot more momentum, and that would help you to step into the trade with also a better price. There's less gaps between the bid and the ask. So bid is where people are bidding, and ask is what people are asking for a particular stock at a certain price. So you would get less gaps between that, so you would get filled at a really good spot by the high volume as well. So that's just a concept. I hope you got what I'm trying to convey to you. It's a very simple concept. You may or may not have realized this in your trading journey as you've learned how to trade, but I hope you can apply it. And the reason I say I hope is that this concept can save you so much money, because I personally too have made a mistake so many times where I have traded at the wrong hours of the day, or I was so eager to just be like active into the market. I placed an order when the market was not actually in momentum, but it was actually flat. And when it's flat, my stop losses would get hit, or I would just be range bound, stuck in it for like a long period of time, and then the market would just change direction. So for those reasons, I would advise you to wait for good direction, and also time your trading into the core hours, and let me know how your trading journey goes from there. And so in the comments before we end, do let me know your thoughts on like how has your trading experience been by trading those hours. What is your preferred time frame as well? I'm interested in knowing that. And I am going to be looking forward to reading each and every comment that you have in there so that I learn. Maybe there is something that I don't know about, or maybe you learned something new today as well. Then share your thoughts, share comments, and I'm looking forward to walking this journey with you as we trade and become better traders.